Two sailors left port on the same day. One watched the sky and moved when the wind was coming. One waited until the wind arrived and moved when everyone else did. Guess who made a fortune? Guess who stayed broke? On an island where merchant ships carried goods between continents, there lived two young traders. Farid and Walid both wanted to buy low and sell high. Both had access to the same markets. Both started with 50 gold coins to invest. Farid traded like most people trade. He watched what was happening right now. When goods were cheap, he bought. When goods were expensive, he sold. Simple, logical, reactive. If cloth prices dropped, he bought cloth. If spice prices rose, he sold spices. He made decisions based on what he could see in front of him at that exact moment. Some months, he made profit. Some months he lost. Over his first year, he ended up roughly where he started. 50 coins became 53. 3 coins profit. 6% return. Not terrible, not impressive. Walid approached trading differently. He did not care much about current prices. He cared about something nobody could see. It's a wind, not literal wind. Market forces. It's the invisible pressures that moved prices before prices actually moved. He spent his first 3 months not trading at all. Just watching, listening, learning patterns. He noticed that when the northern kingdoms had a bad harvest, grain prices jumped 4 months later, once people realized supply was short. He noticed that when new trade routes opened, goods from those regions flooded the market 6 months after the announcement and prices crashed. He tracked weather in distant regions, political changes in kingdoms he would never visit, crop reports from farmers he would never meet. Information most traders ignored because it seemed irrelevant to what was happening today. Month 4. Walid heard rumors that a major shipping route in the south was being shut down for repairs. The repairs would take 8 months. That route carried 70% of the island's incoming silk supply. Silk prices had not moved yet. Nobody was panicking. The shutdown had not started. Most traders did not even know about it. Walid bought every bolt of silk he could find. Spent 40 of his 50 coins on silk when silk prices were normal. Farid saw this and thought Walid was crazy. Why buy silk now? Prices were stable. There was no reason to tie up all your money in one commodity. 3 months later, the shipping route closed. Silk stopped arriving. Within 2 weeks, prices doubled. Walid sold half his silk. Made back all 40 coins plus 40 more. Now he had 90 coins total and still owned half the silk he bought. 2 months after that, a new kingdom was planning to ban the export of rare dyes. The ban would not take effect for 6 months. Dye prices had not moved. Walid bought dyes, waited. 6 months later, when the ban hit and supply vanished, prices exploded. He sold. Tripled his money again. Farid kept trading what he saw. He bought when things looked cheap today, sold when things looked expensive today. But by the time something looked cheap or expensive to everyone, the opportunity was already gone. Year 5, Walid had turned his 50 coins into over 2,000, not from luck, not from insider information. From reading signals most people ignored, from acting on forces that had not shown up in prices yet. Farid had turned his 50 coins into 70. 15 years of work, 20 coins profit. 40% total return over 5 years, about the same as just leaving his money in a basic savings account. The difference was not intelligence. Farid was smart. He understood markets. He could read price charts better than most traders. The difference was timing. Farid waited for proof. He waited until price movements confirmed what was happening. Then he acted. But by the time everyone could see it, the move was mostly over. Walid acted before proof. He looked at the forces building pressure. He bought when nothing had happened yet. When prices still looked normal, when other traders thought he was wasting his money. Then when the invisible wind became visible to everyone else, he was already positioned. He sold to the people who were just figuring out what he knew months ago. Most investors are forward. They wait for the trend. They buy after the stock already went up 20% because now they have proof it is going up. They sell after it already dropped 20% because now they have proof it is going down. They trade what they can see. What is confirmed, what feels safe. But the people who build wealth are trading what they cannot see yet. They are positioning before the move. They are buying when it feels uncertain, when there is no proof, when everyone else thinks nothing is happening. Markets move on information. But by the time information is obvious to everyone, it is already priced in. The opportunity is gone. You are buying at the peak or selling at the bottom. The wealth is made in the gap between when smart people see the signal and when average people see the proof. Check your own investing right now. Are you buying things after they have already run up because you finally have confirmation they are good? Are you selling things after they have already crashed because you finally have proof they are bad? If yes, you are trading visible moves. You are for ride. You will make small returns. You will never get hurt badly. But you will never build serious wealth because you are always late. Shift your focus. Stop watching prices. Start watching the forces that move prices. What is changing in the world that will affect supply or demand 6 months from now? What are governments planning? What are industries building? What are smart people quietly positioning for? This week, pick one asset you are interested in. Do not look at its current price. Look at the factors that will affect its price in the future. Is supply increasing or decreasing? Is demand growing or shrinking? Are there regulatory changes coming? Technology shifts? Demographic trends? Write down what you think will happen in 6 to 12 months based on those forces, and position a small amount of money accordingly. Not based on what the price is doing now. It's based on what the invisible wind is building toward. Month 1 feels like nothing is happening. Month 3, you start seeing early signals that you were right. Month 6, the move becomes obvious to everyone and you are already up 30 or 40% while others are just getting in. Year 2, you have refined this skill. You are reading signals others miss. You are positioned before the crowd. Returns are not 6%. They are 60%. Sometimes more. Farid traded the visible. Waleed traded the invisible. Same markets, same access. Different understanding of how markets actually move. The wind is already blowing. You just cannot see it yet. But you can feel it if you pay attention. Position before the proof. Profit when it arrives. Subscribe for more wealth parables.